So how have I been investing over the last few weeks or last few months? The talk about perhaps a recession, a major pullback, a tech bubble bursting, all the talk has been pretty negative out there. The media has done a pretty good job causing a little bit of doubt, producing a little bit of doubt in the minds of investors. And I would say there's a great deal of fear. I can't tell you how many messages, emails I've been receiving about a possible correction in the market, and a large one. And my answer has been very simply, corrections happen on a regular basis. We tend to have a few 10% corrections, or let's say 5 to 10% corrections in any given year. Not to mention, we tend to get larger ones, maybe once or twice every 5 years, like the 20% type that we received or that we went through back in the spring, March and April of this year. The 20% kind, the bear market kind of pullbacks. So we do see those types of minor corrections, larger corrections. They happen on a very often, especially the 5 to 10% corrections. And people will tell me, well, is there a way we can prepare for it if we're expecting it to happen? Well, the short answer is it is extremely hard to prepare for these types of minor, I will call them minor pullbacks, the 5 to 10% pullbacks. You may not think it's so minor, but in the grand scheme of things, they happen so often that the market and investors should look at them as minor or even healthy on the way to bigger and higher markets down the road. But let's take a look at the S&P 500 over the past month. There you have it. That's what the S&P has looked at or looked like for me, and for how it should look like for all investors. So you have a bit of a slowdown as you moved into November towards the end of October. And then you had a bit of an uptick around November 10th and 12th. So if you're an investor or an investment advisor like myself, yeah, you see a pullback, but then you see markets go higher, nothing that we have not seen before. Then we see from about the 12th of November all the way to the 20th, the market decline. And that decline was the big one, or at least the 5 to 6% range, if you want to call that a big one. In there you had NVIDIA results that came out, the market was disappointed for whatever reason. We'll touch on that shortly. And that was kind of the final nail in the coffin to take these markets down, 5, 6%. But as you can see there, until then, the market was just moving up and down as it always does. So by the time we realized, or I realized, or investment advisors or even investors realize, hey, you're down 5, 6%. This is one of those run-of-the-mill 5 to 10% corrections. Perhaps it was too late. When do you sell? People ask me all the time, when do you protect your profits? Well, I can tell you, you don't sell and realize those profits when markets are going down. When markets are going down, that's when you buy into this market. When you sell and protect your profits is when the markets move higher. And so at the point of November 20th, roughly, just before that, November 19th, market is down 5, 6%. Everyone is saying, maybe we should be selling. Should we be selling? Well, no, I think you should be buying. Why? Well, let's go to our next charts. Let's take a look at a chart for Meta Platforms, formerly known as Facebook. Look at that chart. Yes, it started to come up after the 20th, but it was down 25%. Overall market was down 5%. But do I want to sell Meta? No. It's a fantastic company with fantastic earnings, and the stock has just gone down because of the amount of spend that they're doing, a tax hit that they took, a one-time tax hit, reasons that, in my opinion, are silly. This stock should never have been down 25%. So I'm a buyer. I'm a buyer when this stock falls as it has. Again, if you can handle the risk involved in owning a name like Meta, yes, it was, and it still is, perhaps a buying opportunity. Let's move to Oracle. Stock market falls 5, 6%. Oracle is down till this day, actually, 40% from the high. Now, maybe Oracle shouldn't have been that high to begin with. That is quite possible. But I do not think Oracle should be down almost half, lose almost half its value from its high. So again, am I a seller of Oracle? No, I'm a buyer. I'm a buyer on weakness in the markets because there are many more things to buy now than just a few weeks ago. The end of October, we were hard-pressed to find good bargains, and now we have many of them. Another chart we have here, advanced micro devices, AMD, chip maker, probably the biggest competition for NVIDIA right now. And look at you have there a sell-off in AMD. At one point, AMD was sold off by about 25% on the recent 5 to 6% pullback in the S&P 500. Am I going to be a seller into weakness? No, I'm going to be a buyer of a name like AMD. Again, if an investor can handle the risks that go along with buying AMD stock. So again, if I'm buying when the market is weak, and I just said I'm actually buying as well when the market is at all-time highs, yes, you're right. I'm buying always. I'm always buying into this market because, as Jim Cramer says, who's very famous at CNBC, some of you may know the name, he's always saying that there's a bull market somewhere every day, and it's his job or the job of the investor to find it. And I agree with that. So when do you realize returns? Well, let's show our next chart, S&P 500 chart. It's a one-year chart. There you have it. You sell in July, you sell in August, September, October. And I don't mean sell out of the market. Trim those profits back. Trim some profits, move that money, some of those profits into names that haven't moved up as yet, into cheaper names. That's when you sell. You don't sell when you need to sell or when you're fearful or when the market is falling. That's when you buy. But when the market's doing well, you trim some profits, so you're a seller, and then you buy weakness somewhere else. When markets are falling, you don't sell because a lot of names are down 20, 25% at times. Obviously, not everything is down that much, but you want to be more of a buyer because there are things on sale. You'll obviously want to buy low to sell high. And ever since we had the markets in April, a big sell-off of almost 20%, the markets, for the most part, have been on a pretty nice run from the bottom left to the top right. Our last chart for this segment shows the S&P 500 over the long term. There you have it. This is I guess it's about a 10-year chart for the S&P 500. And you can see over time the pattern, right? You have a run up in the S&P or any index. It pulls back a little bit, and then it runs higher again, back to the all-time highs, and then surpasses those all-time highs. It makes new highs. Makes new highs for a period of time, pulls back again, markets consolidate at a lower level, and then has another run to the previous highs, and then passes those highs once again. So it's a series of new highs, back down, new highs, back down, and that is how the markets work. So yes, as long as you own good quality names at good valuations, this is the pattern that you can expect. But of course, investors get nervous. They don't like to see their portfolio down or the market's down 5 to 10%. Everybody can say, yes, we expect it. We know what's going to happen. But when it happens, it's pretty difficult for some investors. And there's always that question, could we do anything to protect our portfolio, to prevent this from happening, from the portfolio from falling when the markets fall as well? And the answer is probably not. You want to protect the portfolio a lot sooner or a lot earlier when things are good. You don't want to protect when things are more challenged. That's when you actually want to take advantage of the opportunity. So for all of you that have either sent me a message, spoken to me, or for those that have been wondering what to do and expecting this big pullback in the markets that just hasn't happened yet, I can tell you, yes, there will be a pullback. And yes, it will be 5, 10%, maybe greater. But I also will tell you the markets will rebound at some point and move higher again from there. So let's not get boggled down necessarily in this wondering when the next pullback is. Let's enjoy the run that we've been on since April. And I believe the run we're going to be on from now until the end of the year, I think there's a good chance for a Santa Claus rally, especially if we get a cut in interest rates in the US and we're seeing more efficiency. Businesses are reporting good earnings. And I think we could have a good December and into January. So let's try and maximize opportunity when we have it. Enjoy the good times because, yes, unfortunately, those pullbacks do happen and they do happen on a regular basis.